Hi, I'm Merryn Somerset Webb, Editor-in-Chief of MoneyWeek magazine. Welcome to another one of our video interviews. Here with me today is Simon Somerville, the manager of the Jupiter Japan Income Fund. And also I will tell you that Simon and I sit on a board together at Baillie Gifford's Shin Nippon, which, as many readers will know, is a investment trust that invests in Japanese smaller companies. So we have that in common. So we talk relatively regularly about the Japanese market. Now, Simon, the most interesting thing about Japan at the moment, and one of the things that makes the Japanese market possibly of more interest than it's been for a few years, is some major corporate governance changes that have been happening there, right?
Yeah, it's something that I guess the Western world, we're more used to it, that we've had big corporate governance changes, and Japan has lagged the rest of the world there. And what we've seen over the last 12 months is some really significant changes driven down by the government.
So when we say Japan has lagged, what has Japan not done that we have done in a corporate governance sense?
I think the most simple way of thinking of it is that a lot of companies in Japan have not historically been run for shareholders.
Right.
And
so they've been run for who?
Stakeholders.
Stakeholders.
Stakeholders being the employees, being the suppliers, and shareholders really have come further down the agenda.
And that's something that's been driven by the state?
It has,
or by management itself that feels a duty to their employees and to their suppliers and to their part in the economy and society more than they feel a duty to shareholders?
I mean, it is quite complicated, but a simple way of looking at it is that big shareholders in Japanese companies are domestic institutions. So this is a Japanese institution, life companies, pension companies. And in the past, they haven't really exercised their right to vote. Or when they have voted, they've voted in favour of the management. So management, therefore, don't have...
And they've done, I'm not to keep digging, but they've done that way out of pure passivity? Lack of interest?
Lack of interest, no incentive.
No need for themselves to drive good returns?
They didn't really have that as a driver. And in the UK, we have a code called the Stewardship Code, which is a code that applies to institutional investors, so pension funds, life companies, that they have to act as stewards of those people's money, and that requires them to vote, requires them to engage with companies, to things like environmental policy, independent directors policies. And in Japan didn't have a stewardship code. Japan's now got a stewardship code, and so essentially what that has forced is these institutional investors to begin to engage with companies, these domestic institutional investors.
Okay, and this is a legal code put in place by the authorities?
By the authorities, correct. And it's actually
not a voluntary code?
It is. You can opt out of it, but you have to explain why you're opting out of it.
Oh, embarrassing, right?
But actually, everyone is opting in. And it is based on the UK code. So actually it's very interesting that they've used UK code to sort of apply in Japan.
Okay.
And there's good reason, Merryn, why this has happened. I think there's good reason. Is that the pension fund in Japan, which is it's called the GPIF, is its code, the Government Pension Fund, which is a fully funded pension scheme. So Japan actually has all the other problems Japan's got. Japan actually has a fully funded pension scheme for their pensioners.
Wow, that would seem like a miracle here, wouldn't
it? It's a $1.3 trillion fund. So this is a massive fund, and this fund historically has been invested in bonds, and under Abe and Prime Minister Abe, because of changes in interest rates and changes in returns, has had to sell their bonds and buy equities. So they've moved from about 11% equities to 24%.
Okay, and this is because they're not getting any return at all from bonds anymore.
There's
they've
no
got to find a way to get some return.
They're getting negative real returns on bonds.
So if they want to keep this pension fund fully funded, they've got to find returns.
They've got to basically take on more risk to get returns. And so they've been buying equities. So now this pension scheme has basically doubled their equity allocation in Japan. And because this fund is so big, that means that they own about 9-10% of the stock market now.
Wow.
So 9-10% of the stock market is now invested in people's pensions. So guess what? The government has now got an incentive to get better returns out of companies because their pension scheme is got such a big stake. So putting pressure on companies or people to vote and pressure on companies to have better corporate governance has got to benefit the stock market. So when we say better corporate governance, we mean higher return on equity. That means higher returns, better dividends, share buybacks, and basically more focus on shareholders. And that's really what's been driving Japan so far this year, and we think that continues into 2016.
Okay, and it's particularly interesting for you because your fund is focused on trying to produce an income out of Japan, which is very unusual for a Japanese fund, right? Because it's been verging on the impossible to get any income out of Japanese equities for decades now.
Absolutely.
So if that's what you're trying to do, this is
yeah. I mean, the core of our process of how we run the money is cash flow driven. So what I've done for the 25 years I've done Japan. Very sad, I know, doing it for 25 years, but I've done it for 25 years, is to follow the cash and to analyse companies on cash flow. And it's companies that have cash flow that can produce dividends. And so when I joined Jupiter nearly 11 years ago, same process as I used previously, but dividend has started to rise in Japan and dividend culture begun to emerge. And then the global financial crisis happened, Lehman's happened, the earthquake happened in Japan, and dividends kind of got put on the side burn. But now with this change in government policy, dividends are now back on the agenda.
And Japanese companies are sitting on vast amounts of cash, aren't
they're
they?
very, very highly cashed up. So there's pressure from shareholders. I mean, foreigners have always pressurised Japanese companies to pay higher dividends, but domestic investors have been more reticent. Now they're beginning to engage with companies and say higher dividends.
Might there be special dividends?
No, there might be special dividends, more likely to be share buybacks, because what we're beginning to see, which is really encouraging, is the unwinding of the famous cross-shareholding.
Explain that for us.
Okay, so what happened in Japan, and this goes right back to post the Pacific War, the Second World War, is that companies to grow used almost their suppliers to help them grow, so they financed their growth by selling shares to suppliers or to customers, and that's how the businesses grew. So these huge cross-shareholdings began to emerge, which again protected companies in Japan.
Because their main shareholders were their friends, basically.
Friends, yeah, and they're not going to vote for change. What we're seeing with this corporate governance change is that there's more pressure on these cross-shareholdings. So the biggest cross-shareholdings are the banks in Japan. They
holding shares in each other?
No, they own shares in their customers. So, Mitsubishi Bank will own shares in Toyota, for example. And they own about 5% of the stock market. All the three major banks have now essentially promised that they're going to reduce their cross-shareholdings by 50% over the next 5 years, so 10% per annum.
And then that would be a downward pressure on the stock market if
theory,
a buyback culture didn't
absolutely.
appear.
So the share buybacks are exactly, the good companies can buy back their shares. So if Mitsubishi wanted to sell shares in Toyota, we would expect Toyota to announce they're buying back those shares, and hopefully cancel them, and that's a sort of win-win for investors because you get higher return on equities on both sides, less shares in issue. It's good news. Okay. So for these very high cashed-up companies that you mentioned, this change is really exciting.
Okay. So what kind of companies are you investing in at the moment? Where do you see this really making a difference?
Our policy this year has been very domestic. Actually, we tend to be generally very domestic, and the reason for that is it comes back to this cash flow story. Really, the companies that have the best cash flow tend to be domestic names in Japan. They're slightly protected by the fact they're an island nation. That there isn't, you don't have, Google, for example, or Amazon, such strong competitors in Japan. They're going to be more domestic names. So our focus is mainly domestic. And when we go into overseas names, they would tend to be.
When you say overseas names, you mean exporters?
Actually, these days less exporters. Actually, they tend to have overseas bases. So Toyota has huge production in the US. But when we're going into overseas names exposed globally, we would tend to be going into names that are exposed to the US, just because the US economy looks better than everywhere else at the moment. Asia and China doesn't look that great.
But the Japanese economy doesn't look that bad, does it? I mean, you're a believer in Abenomics, I think.
I think I'm not a great believer in the economy. And I think you have to be really. You almost have to start with a policy in Japan that don't expect too much from the economy. They've got terrible demographics, aging population, a shrinking population. So kind of baseline growth in Japan is 1% at best. You'll get some years better, some years worse, but averaging at about 1%.
But growth per capita a bit higher. So
growth
if you compare growth per capita in Japan with growth per capita in other countries, it really looks just fine, doesn't it?
It's great. It does look good.
It's overall GDP growth.
It's overall GDP numbers. So you shouldn't get. I don't look at the GDP numbers too. Actually, I don't look at anyone's GDP numbers. They're all, Japan's are as bad as China sometimes. They're not real reflections of what's going on. So not so much about the economy, but I am a believer in Abenomics. I think some of the reforms he's pushed through have been incredibly positive for Japan.
What sort of thing?
It's a lot of deregulation. So simple things like he's eased the visa restrictions for tourists coming into Japan.
And tourism is booming in Japan, isn't it? The Chinese can't get enough of it.
China tourist numbers in Japan are growing at about 100% per annum. In fact, a little bit more, I think.
And we were talking
they're
about this
spending
the
a lot
other
of money.
day.
They're
Yeah, you were
spending
telling me the other day the kind of things that they're buying.
Well, they're buying necessities. They're buying nappies. They're buying condoms. They're buying cosmetics. They're buying rice cookers. They're buying Casio watches.
And this is because they really trust Japanese brands, and they trust that if they buy them in Japan, they're the real thing.
It's that second point. It's much more important. It's the provenance of where they're buying it. That if you go and buy a Casio watch in China, even if you go to a Casio shop, you're not 100% certain. Whereas if you buy a Casio watch in Japan, it's packaged up in the box and everything. When you go back to China and give that as a gift, everyone knows you've been to Japan, nice status symbol, you've been to Japan, and secondly, everyone knows this is the real thing.
Yeah.
So
and the other thing you were telling me today that I think readers will find quite amusing is that when the Chinese arrive in Japan to shop, they don't actually do the shopping themselves.
There is now concierge services that you hand over your shopping list, and they almost have all have the same shopping list. You see them coming into the hotels, and they've got bags of cosmetics, rice cookers, nappies. I mean, it's
now
hysterical.
the rice cookers, that's interesting. Why rice cookers?
Well, obviously they like rice. Rice cookers are an extraordinary thing. I have a rice cooker at home. I've had it for years, and it's great. I can't believe I spent very much money on it. You can now buy rice cookers in Japan that cost hundreds and hundreds of pounds because they make the best fluffy rice, or whatever type of rice that they like. So this rice cooker costs £600-700, and of course the Chinese love this. They take it back, and this is something that no one's got in China. So it is interesting what they're
Are you invested in the person who makes these rice cookers?
That's unfortunately not. No, I've been to see them, and it's a really interesting company. And it was a bit too small when I first looked at it. It's now a lot bigger because
it's too big and too expensive.
It's just too expensive now. But we keep on looking at it.
What are valuations like in Japan? What metrics do you use when you look at Japanese companies?
The measure I've tended to use in the past, and again, I don't want to be too complicated about it, but it's looking at the return on equity, which is the returns you're getting on that business against the price you're paying for it. So we use price to book, which is basically what price to the value of that business are you paying. Japan historically has always been very cheap on price to book.
Yeah, and expensive on PE.
Well, it was expensive on PE, but it was cheap on price to book. But it was cheap on price to book because returns were so low. So you were getting really low returns, so you don't want to pay a premium for those returns. And what we've seen under Abenomics is those returns go from return equity from somewhere around about sort of 6-7% to more like 9% now, and continually going to the right. And so as you go that way, you would tend to pay a higher price to book. So people are paying more a higher price for those returns.
So
on PE, Japan looks a fair value at the moment, on about 14 times earnings in terms of prospective earnings. The great news about Japan, which doesn't apply to most other markets in the world, is that earnings are going up. So we're still seeing earnings growth.
It's interesting, isn't it? Earnings are stalling or going down almost everywhere else. In Japan, they're rising.
There's one very good reason for that. Japan has no oil or commodity earnings. So the oil price falling is a positive for Japan, whereas obviously in the UK, you've got all the oil majors, and the US, you've got big oil companies. And so the oil price falling is really hurting the whole earnings for that stock market.
For Japan, it's a pure
opposite.
positive.
It is a positive. Yeah. So oil price is adding something like, I think, about 4% to earnings this year, just on its own. Commodities and oil price coming down. The yen being weak is adding to earnings. They're cutting taxes. That's another one of our base deregulations. Cutting corporate tax, very similar to George Osborne.
Corporate tax has been very high in Japan, hasn't it?
They're very high.
So high that everyone's just avoided it.
It's not a great place to do business because corporate tax is so high. It's more difficult to avoid than obviously the.
So where's it coming down to? Will it meet Western levels at any point?
Their target is 30% next year, below 30% next year, and they keep on talking it down further. So I think we'll continue to see about 1% coming off every year going forward.
Okay, and again, that's great for shareholders.
It's a win-win now because one, it's great for shareholders. Two, there's less incentive for companies to avoid paying tax.
Yes.
They're getting rid of some of the loopholes, so that's great. So actually, tax revenue doesn't necessarily fall too far, but the good companies, particularly I mentioned domestic, the domestic names get the biggest benefit of this tax coming down.
Okay. You sound overall incredibly positive on the Japanese market. Is next year going to be a good year for Japanese stocks?
Yes.
The right answer is yes.
Yes and no. The problem Japan has is still exposed to the global economy, and its biggest exposure is to China and Asia, and those economies are slowing, and so that is going to hurt the Japanese economy. It's going to hurt some Japanese stocks. However, I think offsetting that, which is much more important to me, is this corporate governance story that will continue to drive through. We'll see more and more companies becoming more shareholder friendly, and I think that's where we're going to make the big money over 2016. So I think 2016 will be another good year. Certainly relative to the rest of the world, will be a very good year for Japan.
Okay, I tell you what, let's finish up. Just tell us your favourite stock in Japan at the moment.
I think a favourite company for me, and it's one we've owned for a bit, and it is a small company, and it's not as cheap as it was because it's done quite well. But it to me, it just shows what can happen in Japan. And it's a company called Nomura, but it's not Nomura the broker or the investment bank that we know. It's got the same name, but it's a very different company. They're a design company, and what they do is design stores, exhibitions, offices, a little bit, hotels. And to me, it's a really neat business because Japan is upgrading a lot of what it's doing at the moment, and particularly with tourism picking up. There's a lot more stores have to make themselves more attractive for tourists.
Yeah, and a lot of Japanese hotels need a little upgrading.
And hotels, particularly to attract the tourists. And then what we're seeing with the Olympics coming along is a lot of new hotels being built. So my favourite hotel has just been knocked down and being rebuilt.
I know.
Which is a great hotel called the Akura. It's going to be rebuilt by 2019. I recommend staying there when it gets rebuilt. But
sad the old one's gone though.
Yeah, it was a good old hotel. But of course Nomura is going to get the business to upgrade, to do design work for this hotel. Yeah. It's a great little business, and it's just growing like a weed at the moment because of all these new contracts based around tourism, based around Japan upgrading itself, and based around the Olympics. So I think it continues to be a really exciting company to sort of play the improvement of Japan.
Brilliant. Thank you very much, Simon Somerville.
Thank you very much.
Cash is actually going to be a very good investment because under deflation, the value of cash goes up every day. And the other thing about this, what we're looking at today, people who remember 1973 and the oil price shock of the Arab oil boycott, that was the day almost, that those few weeks where people suddenly got the idea, what I ought to do is I ought to borrow as much as possible and I ought to buy as quickly as possible.